Everyone thinks the market is random, but it's not. There are repeating structures, a blueprint that controls every move on every chart. Once you understand it, you'll see exactly where to enter, where to exit, and where the market is heading next. 90% of traders lose consistently. If they had to just do the opposite of what they're doing, they would win consistently, right? The market is either going up or going down. It's either a buy or a sell. You have a 50% chance of winning every trade. If you have a 50-50 chance of winning every trade, why do 90% of traders lose? Think very carefully about this question. You are being manipulated into losing. How, you might wonder? Before we dive into that, make sure you stay till the end of this video. I'm going to be taking you deeper into the master pattern methodology and showing you exactly how this works. So how are you being manipulated into losing? Through FOMO-induced trading manipulation that makes you trade emotionally, causing you to make the wrong decision at the right time. Your best friend and worst enemy in trading is your mindset about how the markets really work. The master pattern is the holy grail that gives you a structured framework into understanding how the markets really work. By knowing how this pattern is unfolding in the market gives you the biggest edge into not falling into this trap. And this is how it works. You've all heard the saying, buy low and sell high. But where do you buy low and sell high? You want to always buy below value and sell above value. In order to win, you have to reverse what you've learned from traditionally taught technical analysis. You have to think the opposite. Let me show you the process on the charts. Here we are on the charts, and I'm looking at Bitcoin. Keep in mind, this strategy will work on any asset class you are trading. So if we look at the chart, we'll see here, we have these value lines that are created through this master pattern technique, which I explained in my previous video. You'll notice I've marked out all the contraction boxes and expansion lines. I'm on the daily chart and I've marked out the daily contraction boxes and daily expansion lines. These are the blue with the white lines. Then the green contraction box is the weekly contraction box and the weekly value line. By adding a higher time frame value line and expansion line and a lower time frame, it gives us more insight into these key levels, and then we can get more precision on our entries and our trades. So if we just look at this process now, we can understand that everything below this weekly value line is where we're going to look for buy positions. Everywhere above this weekly value line is where we're going to look for sell positions. But there is going to be a moment where the market breaks out into the trend phase. You can see over here, it broke out into the trend phase. So in my last video, I spoke about this contraction and expansion phase, where price will oscillate and whipsaw around value 3 to 7 times before it breaks out and goes into the trend phase, which is the profit taking phase. And you can see as we get this whipsaw above and below value, above value, below value, above and below value, this is letting us know where are going to be the best regions to look for our long entries below value and our short entries above value. But because we've got daily value lines and contraction boxes and weekly value lines and contraction boxes added at the same time, it allows us to get more precision. So if we were going to look for long entries, our long entries are going to be when price is under the weekly value lines and under the daily value lines, which are going to be these areas I'm going to mark out right over here. See, this is underneath the daily value line, underneath the daily value line, and underneath the daily value line. All 4 of these boxes that I've marked out would have been your best entries by staying in line with the strategy. And what this does is this helps you avoid the manipulation, and it helps you enter your trades at the same points where the market makers are looking to enter your trades. As a trader, to become successful, you always want to trade in alignment with the market makers. Now I've added the liquidity lines, which is also a big part of this master pattern strategy. If you want to learn more about the strategy, click the link below. We have full-on courses and detailed instructions, as well as an indicator that marks these exact levels on the chart for you. So So you can see we've added these liquidity lines. And now if we go down over here, we can notice when price is tapping into liquidity and it's below the weekly value line and the daily value line, this is where we want to look for an entry. Here's another example, breaks liquidity below the weekly and the daily value line. And then over here, we didn't get a break of liquidity, but what we do use is I have another indicator which I've created. It's called the TDIX. And I've customized it and added a whole lot of new features onto it. But what we do is we go into the TDIX, and what we're going to look for is we're going to look for these shark fins. These shark fins are where we're going to get these green dots, which is simply showing us prices in an overbought or oversold region, and we're getting this EMA that's breaking out of the Bollinger Band. That is one of our signals. Or we're going to look for a divergence. You can access the TDI on the free indicators section, but if you're interested in my specific customized TDIX, then click the link below to find out more. And you can see here is another shark fin. This is not as a convincing entry, but these two were very good entries. This entry followed all the rules of our strategy, and so did this entry. And this would have been absolutely fantastic trades. And then you can see when you enter at these critical points, you are getting yourself into the best possible position before the market goes into the third phase. Understanding these levels and understanding the 3 phases of the market cycle, it's going to ensure you're always going to be entering at the right position on your charts. And this is where you buy low and you sell high. You buy below value and you sell above value, or you sell above value and you buy below value. This simple line in the sand will keep you on track with your trades and help you identify the direction of the market and the best places to look for buys and to look for sells. If you want to learn this exact step-by-step method and strategy, make sure to watch the next video now. I'm going to dive deeper into this and show you the basic strategy we use, whether you're using our indicator or not. Learn to mark out contraction boxes, expansion lines, which are value lines on your chart. Click the link now and make sure to watch the next video.